Friday, February 14th, 2025, Monaco 64, home of alternative economics and contrarian views. Good morning, Clive.
Hello, good morning, Mario, and happy Valentine's Day to you. Did you buy your wife what every woman wants, a bar of gold?
No, not really. My wife and I don't really celebrate Valentine's. Yeah, we never really been into it. But yeah, what about you? Have you bought your wife
Well,
flowers?
I've had an offer this morning from my gold and silver dealer. He's got a coin for the island of Niue on gold in gold. It's something. I think it's a picture of a planet. I haven't made up my mind whether to buy it, but it comes in a very nice box, so maybe I will.
In talking about, gold, do you think you'd be able to get a 400-ounce bar from the Bank of England to give it to your wife right now? Or do you think they're like holding it back? And
Well, if I could get my hands on one, I'd definitely give it to her.
okay, so yeah, it's 8:30 a.m. London time, and we're seeing the precious metals continue to go up, Clive, and also silver. Actually breaking out right now. For now, we never know when the US market comes in, what will happen, but we're up 87 cents or 2.7% in the spot price at 33.20. Gold is not making a new high, but it's still up a bit at 29.36. And you said you wanted to talk about gold. Is it gold deliveries?
Yeah, if you could bring up that chart which I sent you this morning, called Comex 100-ounce gold futures monthly delivery notices, we'll have a chat about that first.
Yeah, let me have a look here. Oh yeah, here we go. Let me share it. Here we go.
Right, so just bear with me while I bring that to the front there it is. So what we see is the amount of delivery notices from at Comex month by month since over a year ago. And you can see we have major months and minor months. They run alternately. Major month, minor month, major month, minor month. So in the major months, that's where all the volume is, and that's normally where people also buy and deliver the gold. Although in the minor months, it's more common to have the gold deliveries than in the major months. But the major months is where uh, people who are trading gold will be trading. So the major months basically are running December, February, uh, April, June, August, October, December, and then back to February where we are now. Now, if you look at this chart, which you can see on the screen, you can see that if we go back to January 2024, a year ago, there were 7,300 delivery notices. Those are notices where the sellers have said, we'll deliver the gold. And the reason they do that is because the buyers are basically bidding up the price and are not closing their positions. So they're going to take the buyers want the gold at the end of the day. Um, that was a year ago, 7,300 delivery notices. In January this year, January 2025, we had three times that number
Hmm.
of delivery notices. In other words, 22,538 contracts were delivered. Each contract is 100 ounces of gold. So three times what's going on there. Now let's move to February. February 2024, which is a major month, a year ago, we had 20,754 contracts delivered. Fairly much in line with the major months across the board. It's pretty average. But we're only 11, 12 days through February at the moment. It's the 13th today. And you can see up until the 13th, February 2025, it's more than three times the amount of delivery notices for the whole of February a year ago. 921 delivery notices. And the price of gold is going up. Now, what that means is someone somewhere wants the gold. But there's lots of theories about why this is happening. And perhaps we just talk about some. Maybe you have some of your own. I'm sure you do, Mario.
Yeah. So,
Let's start with you, Mario. What do you think?
well, first of all, I like to say that each of those contracts is 100 ounces. So 67,921 is just under 6.8 million ounces, which is let's see, 211 tons, which is quite a big amount. Um, yeah, what's going on? And Clive, you know as well that I think in on Comex, when you you get a delivery notice, you get a warrant, and then to get physical, you have to present the warrant. So there is a pretty long process to get to physical, but I think I'm not sure. I think these people want whoever they are, they want physical, and it's very unusual, isn't it? Because yeah, it doesn't even look like that pattern from December 2023 is going to play out this year. And the other thing, Clive, is Comex. If you look at WikiLeaks, there's a WikiLeaks document from 1974 when the U.S. Treasury and the State Department were in contact with the precious metals dealer in London because gold was going to be made legal in the US on the 1st of January 1975. And the dealer said, well, the creation of a gold futures contract on the Comex, GC, which is this one, will stop the public from going for physical, and the futures market will dwarf the physical market, and it will just be a speculative paper market. So COMEX is not supposed to be, uh, not at least not for the common people, the small investors, a physical market, and not even for the big guys, because I think. Yeah, the regulators, they watch very closely if someone takes huge delivery of gold and silver as well. So, yeah, my suspicion is that it could be government, actually. That's how I see it. And I think it could continue going forward because there's a lot of speculation as well that the vaults in Fort Knox are not completely full. And if they want to bring back or bring out a gold-backed bond, treasury bond, they'll need to do an audit, and people need to trust them. And if the gold isn't there, that's how I see it.
So, the volume oh, not the volume, the delivery notices we've seen in February, as far as I can tell, it's an all-time record. I couldn't go back before. I've gone back for 4 years to 2021, and it's certainly a record over the last 4 years. So I think it must be an all-time record at 67, when the average high volume month is 20,000. So someone out there definitely wants the gold. And obviously, one theory is it's a central bank who's been quietly buying up the futures and now is sitting there accepting the futures to be delivered to them. It could well be a central bank, but we don't know that. It could, of course, be simply that investment managers are starting to turn a bit more bullish on gold and adding it to their portfolios. Up until now, for the last maybe decade or so, there's been very little interest in gold from in portfolio managers. And we've seen one or two major banks now announce that they're making it their most favored asset class, i.e., they're putting 3% of a portfolio gold. So it could be a little bit of that. Another theory is that the hedge fund managers are at play. And what would they be doing? Well, because the futures that's further out are trading at quite a nice premium to the spot price, they would be buying the spot gold, either taking delivery in spot of the spot market, so that they can go short the futures where they can collect probably 6% or more annualized as a premium. So it's very hard to know what's going on, but for sure, with the price going up, there are more buyers than sellers somewhere. And
Yeah.
we don't actually know who it is. It might be the government, it might be a central bank, it might be the hedge fund managers, it might be portfolio managers, it might be just a general mania by the public. But there's definitely more buyers than sellers at the moment. And that's not going to go away very quickly.
Yeah, I wouldn't say it's a mania by the public, but because I don't think I remember, Clive, when I work as a futures broker, I traded mostly government bond futures, but we had a client, very wealthy, uh, high net worth client, which was unusual because I work mostly with institutions, and he was trading silver quite a bit. And I told him, if you really want to put the cats amongst the pigeons, you should take delivery. And I went to my boss and I said, would it be, how easy would it be to take delivery of gold or even, or silver or gold? And he said, forget about it. So for the small investor, I don't think it's anything that will be showing here. The other thing, Clive, is people talking about Basel III, that it could be implemented in the US. And Basel III says that physical gold is uh, can be used to calculate the bank's equity as tier one. So that could be it. I think the other thing you said, Clive, that fund managers might want to hold gold, but from experience, if they wanted to have exposure to gold, they'd just buy the futures and then keep rolling it every 2 or 3 months when the contract comes up for delivery. They wouldn't be taking the delivery of the physical gold, excuse me, because it's not practical for them. These fund managers don't really want the physical, or maybe they're learning that not having real physical is a is a risk.
Well, I bet some of their clients are listening to your show, Mario.
It could be. It could be. I've had
Um,
few people contact me that are quite manage quite a bit of money.
Mario, would you bring up the other chart, the second chart I sent you this morning? This is the one with it's red with the jagged line for that's it. If you
That
look at this chart, this is the futures price, the near dated future, minus the spot price. And you can see over years it follows a very, very standard pattern. It shoots up, obviously, as they roll into the new contract, then it gradually goes down till the future equals the spot. Then the new contract starts and it goes down in a straight line. And it's perfect pattern until we get to the current contract where suddenly if you look at the chart, everything's gone haywire. You can see how jagged it's suddenly become. It's not following the standard pattern. That path should be going down, but in fact it's going up, which means that someone out there is frantically buying the futures.
Yeah, the other thing, Clive, and we've seen the story about the Bank of England that they're now taking from 4 to 8 weeks to deliver like spot gold. It seems like maybe Comex and the LBMA are in trouble because people, investors, or maybe central banks actually want the physical, and
Yeah.
these markets are not supposed to be too physical. They're supposed to be more of a price uh, fixing mechanism.
I mean, I think I don't know what's gone wrong with the Bank of England or LBMA, but it's absolutely totally unacceptable to have gold which is supposed to be delivered in 2 days, which they can't for logistical reasons. Lorries in the way, too heavy. It doesn't really matter what the reason is. They should be geared up and they should have a contingency plan to deal with spikes in demand. That's the expectation of the traders. Now, obviously, you've got traders out there who have the gold in London and are short on Comex, and now they're getting their contract is coming to maturity, so they're wondering what to do. Because if they do want to deliver the gold into the contract, they can't get it. So what's their choice? Their only choice is to buy back the spot and roll it into the April contract.
Yeah, and I
So
think Clive, isn't the rule? I've forgotten now. It's been a while. I think it's the short on Comex that has the option to deliver, isn't it? It's not the.
that's right. It's the decision of the shorts, but that decision is totally driven by the price. Well, in normal times, by the way, it's totally driven in normal times by the price at the spot end. Because if the buyers actually want to take delivery, they're bidding up the price, and therefore the shorts will deliver into the spot market and then go short in the future. So normally a short, he will have gold somewhere. He won't be. It might not be 100% covered, but many of them will have some gold somewhere. So they might be short 4 or 5 futures out now for April, maybe April, July. Sorry, what would it be? April. It would be April, June, and August. They'd be short,
Yeah.
but they might only have enough to deliver into one of those contracts.
And I guess if the
Uh,
price is going down, uh, the uh, the longs, there won't be that many longs. So, and the shorts are not going to be really losing money. But when it's the other way around, like when it's squeezing like it has been for the last 7 weeks, they're gonna be in trouble, these shorts.
Yeah, I mean, I say something about markets, and I've always said this: listen to what the market is saying about itself. You don't necessarily have to understand why something's going up, but if it's going up, the probability is that it will. There's a two out of three chance it either continue going up or it will stand still. There's only a 1 in 3 probability that it will turn around and do an upside down V shape and go down. So the probability at the moment is either it's going to carry on up or it's going to stand still. It's only a 1 in 3 chance that it would go down. So that. The reason people don't make money in stock markets is because they consistently think that something's about to do the opposite of what it did last week. So if something's gone up, they think, well, last week's price must have been the right price. I'll sell because it'll go back to last week's price. And likewise, when something plunges, they think that last week's price, the high one, was the right one, so they buy it at the low price. They think I'll buy low and sell high, which kind of makes sense. The trouble with buying low and selling high, when something's falling, you've got a 2 out of 3 chance that it'll carry on falling or stand still. Only a 1 in 3 chance of it doing the V shape that people hope for.
That's right. Clive, you sent me some stuff about the miners and gold and also about
Yeah.
inflation. Which one do you want to look at?
Let's have a look at the miners. If we go to the chart, the long-term chart of the gold miners versus gold, then we'll look at the short-term chart. So what you see now on the screen in red is the gold price. We're going back here to 2008. And you can see that gold has massively outperformed the gold miners. And the gold miners are at the bottom in blue and yellow. The blue one is the GDX, the large gold mining ETF. And the yellow line is the GDXJ, which is the junior miners ETF. So the gold price you see is up nearly, it's getting on for, not quite, but it's over 275%, nearly 300% up over those years. Whereas the gold miners are all down, whether you look at the GDX or GDXJ, over the 12, well, it's actually 17 years now. So there's still a lot of room for them to catch up because they're down and the gold price is up so much. But now if we look at the short-term trend, and we'll see what's going on in the short-term trends, we're looking since the 1st of January 2025 now, and you can see that the GDX and GDXJ, the gold mining ETFs, are outperforming the gold price. They're up about 20 something percent, 22, 24%, whereas the gold price since the start of the year is up about 12%, roughly 10% maybe.
Yeah, and
So
you look at this, there's so much room to catch up, isn't there, Clive?
So, because of the long-term chart, there's a even though people say, "Gosh, I'm not going to buy the gold miners because they've gone up so much." And by the way, Mario, I have to give you a medal because you have been saying ever since I came onto your channel that the gold miners are way underpriced, and here we are. They're starting to perform like magic.
Yeah, I know. Yeah, metal is nice, but I guess people have to be patient as well. So
So let's look at why the gold miners are performing. Can you bring up the press cuttings I sent you this morning?
this
Yeah.
one,
So
yeah,
yeah, that's the one. I just sent three of the gold mining companies which were reported recently, and I picked them at random. I didn't pick them because of anything. So each of these gold mining companies has come out and reported absolutely amazing results. So let's just, I won't talk too much about them, but if you can read this, you can see that Kinross, their full year income went from 400 million to 948 million. Agnico Eagle said they earned 632 million compared with over the same period for the fourth quarter, compared with 289 million a year ago. And Barrick said they earned 794 million in the quarter,
Yeah.
up from 466 million a year ago.
And they're doing a $1 billion buyback as well for their shares.
That's right. And also, an important thing to say is something about the gold price. And I didn't
The
send
other,
that to
well,
you,
the other thing is,
but the average price they paid.
I think the miners, these companies, they're almost like they're going to become the next central banks. They're going to mint the money. That's the liquidity. Did you send another chart?
No, but I've got it in front of me. It was I took Barrick. What price did they pay for the or sell their gold for
Yeah.
last year, and what price did they sell it this year?
You want
Well,
to
a year
that
ago,
or?
it's easier to read it actually because
Okay. Okay.
it's only words. Uh, in 2023, their
Yeah.
average selling price was 1,948,
Yeah.
1948. In 2024, their average selling price was 2,397. In
Yeah.
other words, average selling price about $450 more than 2023. And that, as you saw, translated into increase in their profits of nearly just under 100%.
Yeah. And I mean, this year it's rising again.
And so average selling price was 2,494. Sorry, two. I beg your pardon. It was 2,397. Well, right now the price of gold is nearly $3,000. So
Yeah.
it's up. It's up another $600 more than the whole of last year. So it looks like the profits of Barrick, and it could be of all these companies, I think it'll be the same, all of them who are already reporting massive increases in the profits compared with a year ago, those three companies we looked at as an example, it means that all of them will be reporting massive increases next year as well if the gold price is sustained at these levels, which is much higher than the average selling price in 2024.
Yeah.
So
I have.
that's why they got
Yeah. Sorry. Go ahead.
that's why the gold mining shares are at last starting to catch up. And I think it will be only a question of time before it starts to catch the eye of investment managers. At the moment, it's the smart money which is moving. You know, the smartest people, the people who listen to your channel, are probably already buying into these things. But it'll take some months before the investing public, and maybe even more than a year before the investing public joins in the fray. But meanwhile, I think we're going to see ongoing, all these companies exceeded their expectations. So we're going to see upgrades. We're going to see the analysts recommending it. And of course, that will bring more people. And it's a very, very small market. The gold mining sector is an extremely small sector of the market. So a very small amount of money moving to that sector will move the prices a long way.
Yeah, I have some Barrick, and it's just starting to look a little better. The and Newmont and some others. I don't have Kinross or Agnico Eagle. And the other thing I would say, Barrick, the dividend is still fairly attractive, the yield, and so is Newmont. And I think Clive, these companies are gonna probably increase their dividend as gold goes higher because they're gonna want to. How can I say, reward the shareholders. I know they're rewarding them here with a 1 billion share buyback, but I think dividends are going to be an interesting thing as well. So, do you want to look at the inflation situation now, Clive?
Yeah. Just adding on to dividends, I
Yeah,
have GDXJ, and I got a dividend in December,
yeah,
and it knocked my socks off. I was really surprised how big it was. I was really pleased with that.
yeah. Also commodities here, the CRB, if you want to talk
Yeah,
about.
so I put up a chart here. You can see on the screen of the Commodity Research Bureau, the price change over 1 year. So this is an index of 19 commodities, the sorts of things you eat and drink and use. It's up 18% in a year.
Yeah,
Now, and most of that rise, almost all of that rise, has come since September. Now, the CRB index is what feeds through into the prices of other things, but there's a lag. So we're going to see rising prices in lots of commodities. Well, not rising prices in commodities, rising prices in the end goods, which come from those commodities down the line. So I think inflation's coming. And if you look at the US numbers now, the next one, you
Yeah,
can see where that's coming from or how
I
it's feeding
yeah,
through already.
just wanted to say one thing about this chart. What happened in September? Well, the Fed cut rates, started cutting rates. I'm not sure
That,
if
oh, yeah.
caused it, but anyway, is it not this one? Let's get rid of that. Is it
Not
this
that one.
one?
That one. So here's the from the commodity. Sorry, from the Bureau of Labor Statistics, the official uh, consumer price index. Let's just read the numbers. These are. I'm going to look at the monthly number, which is the monthly increase from the previous month, as opposed
Yeah,
to the annualized number. So July 0.1, August 0.2, September 0.2, October 0.2, November 0.3,
yeah,
December 0.4,
yeah,
January zero point 0.5.
yeah,
So what we're seeing is we're getting larger and larger monthly increases in the monthly inflation rate. So whilst I think we could have a dip, there's a big month going to drop out of the 1 year equation in a month or two, but it's clear that in the short run, retail prices are rising at an increasing pace.
yeah,
And that means that the aim of heading towards 2% inflation, I think that's gone. All the central bankers are saying we're going to get 2% inflation. Well, it doesn't look like it to me. If you take the last month, January month, which was 0.5%, and annualize that, that's over 6% a year.
yeah.
If you
And
take if
Clive,
you take the last three
sorry,
months, so
sorry,
take the last 3 months, 0.4 times 3 times 4, that then you're going to get an annual rate of over about 4.5%.
yeah. I saw yesterday. I think Trump commented that we might get some higher prices for a while, and some,
Oh,
and
temporary.
no, yeah, and he's right, but I think politicians, even though I think Donald Trump is doing a lot of the stuff he promised. I mean, I don't agree with a few of them, but most of it is like really amazing. I didn't expect him to do this, but politicians always underestimate things like inflation. So just the fact that he said that we might see some inflation, some rising prices is significant, I think. So do you want to, there's some other charts
Yeah,
here.
you can look at those graphically. So this is what the one you just showed,
Yeah,
which with the arrow there. That's showing how inflation was falling from 2023
yeah,
through to June. So in June we had negative inflation actually
yeah,
in America, and now you can see quite clearly the trend is since June last year. The trend in short-term inflation, that's monthly, month on month,
yeah,
is rising.
yeah,
And then if I annualize it, and we go to the next one slide, which is the annual, you can see the inflation obviously has bottomed out. Again, it looks like it's bottomed out at about September or
yeah.
August and is now on an uptrend.
Yeah, I remember a year or two ago when inflation, or even yeah, last year, there are a lot of people like Tavi Costa, for example. He showed how in the 70s there were three waves of inflation that they come in waves. So this is kind of proving that. Um,
Yeah. I
yeah,
mean, if you look at this, in September we had inflation of it looks like 2.4. I'm reading off the graph here. Then it was October 2.6, and November was 2.7 or 8. Uh, December was 2.9, and January is 3% annualized.
yeah.
So we're no longer going in the direction of that 2%. That 2%'s gone out the window.
And that's why the Treasury 10-year yield is crept back up. It's almost approaching 5%. We'll have to see what happens there. There's another one here. Or no, that's the CRB one. We've seen that. We've seen that.
I think we're done on the ones I sent you.
Yeah, the other thing I wanted to talk about, Clive, and this is more to do with geopolitics, is the fact that Donald Trump and Putin seem to be really how can I say, excluding the UK and the EU from the peace negotiations for the Ukraine war. And I think that's significant because I think Europe, and especially the UK, they I think their goal, and you might not agree with me, Clive, or the viewers, the goal of London and the UK and the EU to some extent was to get rid of Putin and make sure that he still had control or influence in Russia because Russia is the biggest country in Eurasia. And I don't know if you heard of Mackinder. He was he kind of invented geopolitics. He said whoever controls the heartland, which is like from the Volga to the Yangtze River, like Eurasia, controls the world. And I think this is really significant. And I think Trump, he's saying we can't defeat Russia, so we're going to control the Western Hemisphere. We want Greenland. And let Russia control its own destiny. But I think it's the Europeans that lose out. But at the same time, Clive, maybe you want to comment. I saw that the euro and the pound rose yesterday quite a bit. It could mean that things get back to normal and Europe gets its cheap energy again. What do you think?
I don't know why the pound. I didn't follow the euro, but I don't know why the pound rose yesterday. I did see they had uh, better inflation numbers than the United States, so whether that was a factor, I
Yeah.
don't know.
Yeah, and the other thing that surprised me was this here, Clive. Donald Trump actually said, and I can play it, but we can read it first. Donald Trump says he wants to, along with China and Russia, have their military budgets. President Donald Trump announces he will meet with both China and Russia to urge everybody to lower defense spending all around the world. He said, I'm going to say we can spend this on other things. We don't have to spend this on military. Um, I thought that was quite big comment. I mean, it's always better to have peace and and less conflict.
Well, I mean, I do not wish to want to wish for war, but obviously gold is benefiting from the uncertainty we've got at the moment, isn't it?
Yeah, but I was thinking about that the other day, Clive. Uh, there is uncertainty, but at the same time, you're seeing the U.S. now try to come together with China and Russia and kind of calm things down. Uh, I would have thought gold was going to correct down after that, but I think in the new paradigm, we're seeing people are going to focus a lot more on looking after their own like backyard and not focus too much on globalization. So they need the resources. It's not going to be as easy. Is that how you see it?
Well, yeah, I mean, I think that we had last year we had 27 central banks increasing their gold holdings, and the reason they were increasing their gold holdings was they came to learn that the dollar is now being weaponized, and in some situations, you may not get your dollars back. You may own treasury bonds, you might find them frozen or worse, given to your enemy. So, central banks are saying, well, we can't have that. We need to have an independent way of paying for things if we need to, if the SHTF happens.
Yeah.
So, with gold, there'll always be someone willing to take our gold, even if they won't take our dollars.
Yeah, and I think even if President Trump is trying to open a debate with the Chinese and Russians, I think countries need to be careful because you never know in 4 years what president it will be, and also Europe what they will do to Russian or Chinese assets. Maybe it's better like this. Uh, be mindful of you know being too trustworthy and look after your own assets. Clive, should we I usually you probably know that I go over the markets towards the end of my normal video, so maybe we can do that
Let's
here.
do that.
So I've got here my IG.com account. So we got, and it's what, 9:04 London time. So spot gold is doing fairly well. 29.36, the high is 38, low 23, but it's silver really that is doing well here, Clive. It's up almost near the highs here, 33.26. I just want to show the chart. This is the daily chart, and it's looking pretty good, isn't it? I
It
mean,
is.
I think we could be going towards this line here, which is a lot higher. So the next,
So,
yeah,
yeah, so you're just on that, your silver is showing a change of 2.8%.
yeah,
I'm looking at the silver futures market on my screen. It's showing the silver futures are up 3.9% today.
yeah. Wow. So this is the spot price. So there, yeah, that's interesting that there's a discrepancy there. And where is that the March silver?
That's the near dated contract, the CL1, which is up. Uh, yeah, it's basically up 3.9% a few seconds ago.
What price is that trading at?
It's trading at 33.97.
Yeah, yeah. So yeah, let's put this chart in, let's do it weekly, see how it looks. Yeah, it looks pretty good, doesn't it? So I guess the next target will be the high from October. It was at just below 35, the spot price. So, um, yeah, the Dow futures, which is called Wall Street here, is pretty much unchanged. Yeah, it's not much happening in the stock market. I see the dollar's going down against the South African rand. I don't follow that too much. And copper, Clive, copper is doing well. And you're talking about inflation. And copper is a good indicator also of the economy sometimes. Could it be pointing to China coming out with more stimulus as well, you think?
Yeah, I mean, if China are going to start building roads and railways and cities, of course it's going to use up a lot of copper. By the way, I saw that Barrick, one of the contributions to Barrick's increased profit was the increased price of copper. They did well out of copper as well.
Yeah, let's quickly look at the bond market, the 10-year. Uh, yeah, that's 454. I think it got up to 466 earlier this week, and then
Yep.
it surprisingly dropped yesterday, even though even the PPI was higher than expected. Yeah, that's weird, but markets do that, so they always so
Yeah, nothing ever goes in a straight line,
yeah.
and the nervous Nellies, when it goes down, think, "Oh my God, it's heading down forever," and they sell. When it goes up, they think it's going up forever, they buy. The greatest thing in investment management is doing nothing. Those who do nothing make the most money,
Yeah.
and that's been my experience over 50 odd years.
Yeah, I think it was Jesse Livermore who said, "Be right and sit tight."
That's right.
Okay, great, Clive. Yeah, let's keep an eye on silver, see what happens this afternoon, London time or Swiss time. And I wish you, well, anyway, have you got anything to say to the viewers? It's always nice to hear your words of wisdom.
Well, I've been offered by my silver and gold dealer this gold coin, but he's offered me a new. He's got some silver in as well, so I'll probably be popping along later today or tomorrow to buy that.
Great. I ordered a couple of silver coins from the Royal Mint, actually. No, yeah, well, not the Royal Mint, from one of the dealers, and it's a new silver ounce coin, and yeah, it's with silver that was recovered from a sunk ship off the coast of South Africa. I think it was silver that was coming from Bombay to Cape Town like 100 years ago, and they found the boat, the ship, and the silver has been used to mint these commemorative coins. So that should be, I should be receiving it soon.
That's great. Next week, when we speak, I'll tell you about some commemorative coins I bought recently, which have a lovely story about them.
Great, Clive, and have a great weekend and great weekend to the viewers as well. And we'll see you on Sunday for the live stream.